Okay, folks, this is just another test broadcast for the London Open. So when we start, let's start by reviewing our charts. We've actually had 6 days of sell-off for the euro. Although sell-off would be a very, shall we say, generous word for it. I mean, you've had a consolidation for much of Wednesday and Tuesday. Yesterday, we finally have a nice black candle in our charts. Nothing to write home about. You did end up with a clear bearish body, but the size of it, the range, is not that impressive. Now, what else do we see from our charts? We actually, for the day's low, we've almost touched the 38.25 retracement level of that rally from the early part of March. We have our indicator-wise, we have a bearish MACD, stochastic that's oversold. Given the breakout that, or rather, given that our double top in the daily surplus has clearly been triggered, I tend to favor looking for shorts in euro at this point. Data-wise, we did not have anything terribly bad from the US lately. In fact, numbers yesterday were slightly better than consensus forecast. As far as today's concerned, what are we waiting for? We've got GDP. It's annualized GDP. Remember though that there's a bit of a delay when you talk about GDP data. Typically, events from January, it's March now, so events from what we are likely to see here reflected on this GDP data will be from back in the fourth quarter. What does that mean for us? It means that I'm not expecting a lot from this. The consensus forecast for GDP is at 2.3%. Again, if we do get anything big on the upside, which I doubt would happen, that could be additional catalyst for us to see a bit more weakness in euro, a bit more strength in the dollar. Maybe try to push through that 38.25 retracement level at 107.23. If I go intraday, what am I seeing? We've had a bounce, a retracement, a pullback from the Asian session. We actually saw an inverted hammer during Asian midday, and we took that as an excuse to short our euro. I know, we were supposed to talk about London Open, and that's not exactly the London Open strategy. Well, the thing is, we can't expect markets to consolidate all the time ahead of the London Open. So there are times when you just have to make a decision. You just have to take your cue from whatever signal you are seeing. Of course, if you're new to trading, I would always advise that you stick to one method. I would always advise to stick to something that would be easy for you to record, easy for you to identify points of failure, easy for you to identify when things are working. The problem when you're using multiple approaches, multiple strategies, is that it's hard to get a feel of things. It's hard to get the muscle memory if you're talking about different setups when you trade. But again, the point of trading during the London Open is you want momentum. I mean, okay, the easiest way to trade is to trade a breakout, just have a buy stop, just have a sell stop. But the point in trading the London Open is because there's liquidity, and with liquidity there's momentum. And at this point, since I'm already in the market, I'm just looking at running that euro short, see how far things can get. If we look at our charts, we have our stop just above the day's high, our price target. All right. In theory, since our ATR is at 86, so in theory 86, we've got 86 pips for our average true range. I should be looking for a target. Given the high is at 107.86, I should be looking for a target of the sell-off at around the 107 region. Right now, working rate is 107.61. Remember though that we are trading a prop account, and this particular prop account has a consistency rule, and the consistency rule says you should not have a trade making more than 20% of your profit target. Since the profit target is 5,000, we don't want to see a trade of making more than $1,000 because that would not be counted, and we don't want to waste our effort. So we are placing our TP around, can't really read that. Where are my glasses? Where's my lens? That's about 107.40. Okay, so that's actually well above yesterday's low. That's well above the price target for bears. That's well above putting us to giving us the average daily range. But as I said, it's useless. It's pointless for me to look for more, given the consistency rule. So one thing, if you're trading your own money, I would say go for it. I'd probably plan this and say once you hit that 107.50s area, take some profit there, and then go look for profits again around the 107.10 region when you're near the average daily range. But since this is not my money, this is a prop challenge. Our behavior, our objective should be adjusted according to what the rules of the game are. And the rules of the game says no more, or rather no profits more than 20% of your target. So that being the case, we placed it again at 107.40. Alright guys, what else should we be aware of? Well, normally for me, I'm really more concerned with when it comes to data. I'm really more concerned about what's happening in the US. As we said, we brought that GDP number later. Anything else? Okay, we seem to have the ECB president speaking later. I don't have the details on where she'll be speaking. Now, how does that matter for the market? Typically, for speeches by Fed officials, by ECB officials, you have to look at the context. Where are they appearing? Are they appearing in a setting where they'll be speaking with their peers, meaning other central bankers? Or are they attending some private function, some private sector event? Why does that matter? Because if they're attending private sector events, they'll probably be talking more about specific industries, how policy would impact that, so that particular industry. So I won't be too concerned about the impact of such statements with respect to the currency markets. But if an official is in a function that is geared towards policy, okay, policy statement, or even just a speech where, again, the participants are mostly central bankers or even your bankers, then I would closely listen to what is being said in such an environment. All right, guys. So this is just a test. So that's it for us. But by the time we do live sessions for this, I'm hoping that we are going to have 30-minute sessions. And eventually, because I'm looking foolish here, nobody's really nobody's really watching. So anyway, I'll just cut things off at this point. And good luck with your trading.